While many stock portfolios were deep in the red last week, my trading account reached a new all-time high. It's currently sitting at $34,777, which equals a 67.40% return year-to-date. And just in the past week, I achieved a 32.86% performance. In this video, I'll show you exactly which trades got me there and how I capitalized on the recent market moves. U.S. President Donald Trump's newly announced 10% tariffs on goods from all countries have officially come into effect. The executive order, signed this past Wednesday, is now law. Trump had presented the sweeping tariff package during a long-anticipated event in the White House Rose Garden. At the same time, he introduced a more complex mechanism that's set to impose even higher tariffs on countries with which the U.S. runs particularly large trade deficits, a policy scheduled to take effect from April 9th. The market reaction has been sharp. Beijing's response to Trump's tariffs has added another layer of uncertainty, shaking investor confidence across the board. Right now, the stock market seems to know only one direction, and that's down. The fear index, or volatility gauge, has jumped to its highest level since August. We saw heavy losses across all major U.S. indices. The Dow Jones dropped by 5.5%, closing at 38,315 points. The S&P 500 fell by 6.0%, and the Nasdaq Composite dropped by 5.8%. Meanwhile, Fed Chair Jerome Powell has warned that the U.S. economy may now be entering a phase of higher inflation and slower growth, a scenario that, just weeks ago, seemed almost unthinkable. Let's jump over to my trading screen and take a look at the trades I executed last week. As I mentioned in the last episode, my idea was that $3,150 might mark the end of the recent uptrend in gold, and that we could see a pullback from this level. So I went short at $3,150, with a stop loss at $3,180. Unfortunately, I got stopped out after Donald Trump's tariff announcement, which caused a spike in gold. Frustratingly, right after hitting $3,200, the price sold off again, just after I had been stopped. Still, this confirmed for me that levels above $3,160 are being used as selling opportunities. That's why I've re-entered a short position, again at $3,150, this time with 3 contracts. Right now, the position is about $500 in profit, and I expect further downside in gold from here. Let's take a look at my trade idea in the DAX. We're currently approaching a key support zone, which sits around 20,500 in the cash index. However, in the DAX future, that same support area is slightly higher, around 20,700. That's why I decided to place my buy limit order at 20,730, just above the support in the futures chart. The idea is that buyers might step in at that level, creating a short-term bounce off the zone. I'm not expecting a major trend reversal here, just a quick intraday move to the upside that I can take advantage of. So that's the plan behind my buy limit at 20,730. A clean technical setup aiming for a fast reaction at a key level. As we can see here in the DAX future, the market briefly dipped below 20,700. I positioned myself with a buy limit order at 20,730, slightly above the key support zone. So far, the trade is playing out very well. The market is currently trading around 21,047, and I've set my sell order in the 21,150 area. Let's see if we get there. As of now, the position is up approximately $1,500. The trade is still running very well, but I'm starting to notice that the momentum on the upside is fading a bit, especially after that 300-point bounce we've already seen. I'm now considering adjusting my target slightly lower to lock in profits, since we're seeing some selling pressure coming in from time to time. The original idea was simply to profit from this short-term bounce, and that move has now basically played out as expected. so I've decided to close the position here and take the profits. From this DAX trade, I was able to lock in a profit of $1,558, a clean setup that played out exactly as planned. My gold trade is also moving nicely in the right direction and is currently sitting at around $830 in unrealized profit. Both trades show how powerful clear setups and proper risk management can be. Let's take another quick look at the gold chart. What you're seeing here is the downward move that took place Friday afternoon. At that point, I decided not to wait for my original take profit at $3,000, but instead to close the trade early at $3,042, since it was already showing a profit of over $3,000. With so much uncertainty in the markets right now, I didn't want to carry the position over the weekend, so I chose to lock in the profit and go flat into the weekend. And if gold does push higher again, I can always look for a new short entry, since I still see the 3,150 to 3,160 range as the likely top of this uptrend. I also took a quick scalp trade in the S&P 500 on Friday, which brought in another $1,200 profit. So as of April 7th, exactly 3 months into this project, my account stands at $34,800, which means a plus 67.59% return year to date. I'm really happy with how things are progressing so far, and I'm excited to see what the next few days and weeks will bring, because right now the markets are full of opportunity and momentum. That wraps up a very exciting and successful week. I'm really curious to see what the next few days will bring, especially since over the weekend, we're seeing more and more comparisons to Black Monday in 1987. It looks like Donald Trump has no intention of backing off his tariff policy, and the markets are clearly feeling the pressure. So I'm staying extremely cautious with long positions for now. As you saw in this video, I went flat into the weekend. I'm holding no open trades, just waiting patiently for clean new setups to emerge. Let's see where the market goes from here. If you enjoyed the video and the content I share, drop a like and let me know in the comments. Do you think we've seen the bottom already? Or is there more downside ahead in the stock markets? Thanks for watching, and I'll see you in the next episode of Road to 1 Million.